Hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips here on the 7th of February 2016. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, guys, what's going on? So, again, keep in mind that we're going into a week where basically China's on holiday, right? Year's holiday in China. The data calendar, if you look at Monday and Tuesday, is pretty much dead. Everything will start to pick up, or really it's all about Wednesday. We've got Yellen testifying, we got crude oil inventories, and then, we've got that Yellen testifying again on Thursday with unemployment claims. So again, we do have some other points. We've got the German GDP on Friday and retail sales out of US on Friday, but really the week's shaping up to be fairly dead, or at least the market can do whatever it wants without being affected by at least scheduled tape bombs or stuff on the wire. So let's see what happens. We still might have some stuff out on crude, but again, that's the way the week is shaping up. So let's look at a couple of things. I mean, if you look at the yen, right, something which we've been talking about, which is interesting here, is basically we've been talking about the fact that that 118 has been a pivotal level for Momo and flows for daily closes. And actually, if you go back on the shorter time frames, you can see how that level's been defended a lot in the past and how you've seen a lot of flows going around those zones. But basically, the other thing we talked about also in the other session, also live on Twitter, was this whole 1650 into 1600 zone. This is where the BOJ started to get vocal, right? We started to get those pops, then we had the crude on the dance floor, and then bam, we got that huge move up, or that aggressive move up that's pretty much being wound down, right? The whole move's come all the way back down. So the big question is, is the market still, is the BOJ still going to be on the wires, or are they going to say something, or are they going to try and affect the market, and does the market care? I think instead of trying to make things harder than they should be, I think the way we're going into the week, we're looking at it as 118 resistance, 115 support, and the 1650 area, this is the potential danger zone, right? So what that means is that this is a very big chop zone, and it's very difficult to try and do something inside this range. So this is a classical area where we would say don't get confused about velocity of move inside range. So that means that from an intraday perspective, as long as we don't close above 118 or below 115, we expect things to be very, very choppy, but to hold some kind of a neutral stance or some kind of a bid tone, right? If anytime this week we get a daily close below 115, this could look pretty ugly in terms of acceleration to the downside. If we get a daily close above the 118, we would expect to see potentially a quick move back into the 120, back to the scene of the crime. Okay, but in any case, with the BOJ being active, even though the market might not care about it anymore, we're not huge fans of trying to play against central banks. So we definitely would not be looking to short this area. If anything, we'd be looking for tactical longs. Okay, so gold, what's going on gold? So gold, we discussed about the fact that we were in what we call the range 1150, 1100, and 1050. Hold above 1100, we expected those 1150s, or we said 1150s to track. Now that we've broken above that 1150, we consider that as being the mid-range, right? So we have what we would call a range shift. So top of the range 1200, mid-range 1150, 1100 bottom of the range. So right here, as long as we hold above 1150, would not be surprised to see this try to take a stab above into the 1200s. Daily close is below this level, still mid-range tracks 1150, daily close above or below 1150 pivotal. Even if we come back down and we hold above 1150, we'd expect it to try and rotate higher again. If we come back into the 1150, we get a daily close below, we would expect it to try and move back down. Again, it will have to deal with all these moving averages that were resistance and now will be acting as support, but this is pretty much the mid-range. And again, unless something drastic happens with the market, this is the range to look at. So if the market falls out of bed, right? If the market catches a bid tone again, back down. So again, it's all going to be about the market. So, but those are the levels to look at, and those are the levels we are focused on, okay? Aussie, what's happening on Aussie? We were looking for this reversal at lows, failure to break these lows, these daily closes for a move back into mid and to the descending trend line. That's done and dusted as far as we're concerned. A lot of choppy action here, not a lot of interest. Again, if we don't break below these lows, this could still be trying to attempt some kind of a bullish rotation, but we feel that the interesting areas to play are the extremes, either at these lows, either at these highs. We're not so interested in this mid-range. Okay, so where does that take us on euro? So we talked about this level on euro, and we said that, you know, it's just pretty much a range as long as we hold inside this 1090s and 0700. When we close outside, then you could get some momentum, and you wouldn't want to fade or fight the flow. So here we've got a daily close below, so we'd expect this to stay bid, right? Again, we expect ultimately this to come back down to those lows, but it's a very tricky one, right? Short term, if you look at a 4 hour, you know, without trying to make it harder than it should be, I'm looking at this previous resistance that is acting as a bit of a pivotal level. So the way we're looking at it going into the week is, as long as we hold above these 1140s, call it 1150s, whatever you want, still possibility for a squeeze back into those highs, but we'd still expect to see sellers here. Back below 1150s, we would expect to move back into that 1090 very, very quickly, right? And that's going to be the pivotal level back into the daily. Daily close below that zone, then we would expect this to hold back heavy tone and move back into 08, 90s, 09s. If we close above, then we would expect it to try and take a rip back to print new highs. That's the look on euro. What's going on Kiwi? Kiwi stuck. We're looking at this action at these lows, pointing to move back into mid, possibly back into the top side of the range. I think the quick pips were done. Right here, it may still be coiling, but we don't think there's an awful lot of edge in the mid. High, low, mid, not a lot of edge there. If you look at it on a daily chart and you put some moving at the 50, the 100, and the 200, you could see that basically it's very, very choppy in this range. It's looking for direction, deciding if it's going to move back down or it's going to try and have a bit more of a healthy correction. I don't think there's an awful lot of edge playing in this mid-range. Not really a huge fan. We think the quick pips were done there. Crude, what's happening on crude? It's all about the 30 mark, right? We were aggressively bidding up the 30s again. But right now we're flat on this. Not an awful lot of edge, a lot of wheeling and dealing, and we're still making lower highs, right? So again, flat out on that failures in those highs. I don't think there's an awful lot going on as far as I'm concerned. I don't think it's cheap enough to buy. I don't think it's expensive enough to sell. Areas of interest will be 34s, 30s, and, you know, back into those lows right here. A lot of wheeling and dealing, not that interesting at bid. Maybe if we come back into the 30s, but it could still be trying to base, but it's far from being a pure chart, right? So it's still bearish. So I think the fight will be around the 30s, daily close above or below, you know, bull bear line. If we look at the ES, what's going on the ES? So here on the ES, we're still trying to hold these two bullish, not what I wanted to do, these two bullish weekly closes here, right? 1, 2. And right here, what happened, you know, we said we expected this basing pattern, right? This is pointing to a move back into this breakdown zone right here, or back into that 100 DMA, right? Let's just put a level here. You know, we're talking about those 1980s, you know, all the way here. But we said we expect a lot of sellers to start to come in at the 1940s, 1950s. This is the previous week high. So remember, we opened up, we had this very aggressive week down, follow through, and then we started basing. So we got, you see this high here is being protected, 1940s, 1950s, whatever you want to call it. And we're getting a lot of chop. Now, I think you can make a case for this building a bottom. I think you can make a case for this being uber heavy. Bottom line is, I think a lot of people are struggling to call this because it's very, very choppy. As we said, what tends to happen, right, our read is that the problem is that as long as we're inside these highs and these lows, right? Inside, a lot can happen here. And it could, look bullish. It can look bearish. But really, unless we break outside of this range, it's a very tricky call. Clearly, if we close back above here, right, there could be another 40 points to the upside, but this is going to be a sell zone, right? If we close below these lows, most likely you're going to have 17s attracting, but you've got that 200 coming in. So it's far from a clear chart. So that one of the things, well, all the questions I've been getting, at least our opinion is, it's not that clear, especially if you're looking at shorter term time frames. If you're looking at a weekly, there's nothing that doesn't suggest that we're still trying to hold these two bullish candles, and we're still trying to base for an ultimate rotation higher. But again, if you're looking at it on an intraday, it looks like it's very, very heavy, right? So going into the week, the way we're looking at this is still an awful lot of chop here. There's probably intraday a lot of, there's points to be had to the long side and the downside. So I think the nimble players, the players that are able to look at this on both sides, are the ones that are getting the most out of this market. I think it's not a market to try and position for a big move yet, because the risk, because of the chop and because of the wide area, you have to trade so wide, you have to be ready to give back an awful lot. So I'd still prefer intraday, intra-week plays rather than trying to set up huge, bigger swing positions here. I think you just want to stay tactical. And 1940s, 1950s are going to be sell zones. Move back here, you'll probably see some bids coming in. We saw very aggressive bids on those lows. The way this is closing, it's heavy, and it probably wants to test last week's lows, right? So that's what I'd say. Short term, see what happens into those lows, right? If the market can take those out quick early in the week, then we can get some more downside pronto. But if it can't take those out, don't be surprised to see another rally back into the highs from last week. It's very, very choppy. But again, I think we can make a case for both the bulls and the bears. If you're looking at cable, fairly nice action. What we discussed is that even though it's technical, this is really trading on Brexit, right? It's all about the Brexit. And so as long as those Brexit fears and those headlines are on the wires, we'd be very weary about trying to stay too stubbornly long. Our play was this bullish reversal at lows for a move back into the breakdown zone on the weekly, this previous support. Should act as resistance in line with this mid channel, and this was going to be the sell zone, right? We got a nice little daily reversal right in that area, and off that daily close, a nice about 130, 150 pip move down. So far it's behaving very, very technical, very nice. So going into the week, technically I would say, back above that breakdown zone on the weekly, it could easily move back technically all the way back into those 150s, 150-50s. As long as it holds below, would not be surprised to see this test the 143s quickly, but this could easily be a move all the way back down. I would just say very cautious trying to play this to the long side because of the possibility of all the Brexit. Now, if you get some super good news for the staying in camp or something, then you'd want to watch out to the downside. But as long as we don't have more clarity, I'd still expect to see a lot more risk of velocity to the downside on headline risk. So I would be a bit cautious on this. Technically, the short's playing out quite nicely. What else have we got to look at trying to keep this? Yeah, by the way, keep in mind that, the yen is interesting because you're seeing a lot of action. Look at that, tried to close back above the 200 DMA, clip some stops, and then close back below. So I think for a lot of people asking, are we going back to the 125s, etc.? As long as we close the daily below the 200, this is going to stay heavy. We need to start getting closes above here to see more of a bull case materialize. Last but not least, CAD, what's going on CAD? So we had a pretty pure sell off those highs right here. We talked about the 140 being pivotal level now. The 50 tried to catch it. It couldn't. It's still holding well ahead of the 100 DMA. Going into the week, we could see a lot of wheeling and dealing. Don't forget Yellen. We got some CAD data, but it's all about the dollar, right, and crude. So 140 pivotal level, bullish above, bearish below, inside 144, 135 range. No big change. Guys, thanks for listening. Again, as always, thanks for sharing. Thanks for liking. It's very appreciated in terms of the live sessions on Sundays. As I said, we'll try and do these at least once a month. So if memory serves, This is the third one since our last live one, so most probably, if my memory's correct, next Sunday we'll do a live session, and those are like 1 hour, as long as they have to be. We take any questions. So again, thank you so much. Have an awesome one, and see you around on Twitter. Bye bye, guys.